those user journeys may actually help the fraudsters. Welcome to your Feedzai Weekly update with me, Hardeep Rai. There's been a lot of articles about neobanks and the perceived high rates of fraud. If you look at it from a shallow perspective, you could see that actually the rates of fraud are going up at neobanks, potentially in some cases more so than traditional banks. But actually that's a very one-sided view of that. I think if you dive into the information and the data, you start to see some of the other trends. Firstly, growth is a big part of this conversation. If you think about neobanks, they're heavily driven by customer growth and activation. And actually, if you compare that to traditional banks, they will have a bigger uptake and a bigger increase in users month on month, week on week, year on year. And naturally, that's going to create a bigger attack surface or potential target space for fraudsters. So it's quite normal to think that fraudsters may target neobanking customers more so in some cases than the traditional banks. But then actually, if you look a bit further into it, there's loads of reports about the fact that fraud victims, especially when it comes to scams, are becoming younger and younger. So the old perceived view that it's old, elderly, vulnerable people isn't completely true. They are susceptible, but actually younger people are falling for scams, falling for these APP type frauds. And that is a predominant growth area for fraud as well. So if you put that together, you've got a young cohort of people potentially signing up to these neobanks in large numbers, and that's a larger attack surface once again for those fraudsters. So that starts to explain some of the nuances. But then if you go even a level deeper than that, and you think about really what the business model of these neobanks is based on, well, it's all about getting customers in quickly, giving them a really seamless experience, not just when you're on board, but actually when you use their services as well. So you can very easily make payments. There's limited friction. It's all about the customer experience, all about the user journey. Now, if you compare that to a traditional bank and look at a fraud scenario, so a transaction risk engine may fire, it may alert on certain transactions. The customer could be given an option to service that themselves through an app, through an SMS, but in many scenarios, they'll be asked to call someone, or the bank themselves will call the customer. There's some sort of fallout to an operation center. Now, neobanks don't have that infrastructure. They don't have large teams sat there able to call customers or take calls inbound. So they may have to rely a bit more on self-authentication through the app, etc., which may lend itself also to the fraudsters being able to coerce people into clearing those alerts. So naturally, those user journeys may actually help the fraudsters, and it may start to give some of the reason why fraudsters are targeting those banks more so than others. It's an important thing to call out that if you just look at the data as one thing, you just look at the numbers, it can show a very specific pattern. If you start to dive in, you start to see more of these nuances. And it's not simply a case of they've got more fraud or they're being targeted more. It's what goes underneath. It's the types of customers they have, the types of journeys they have. So what does this mean moving forward? Regulation is changing massively. We see that already. And I think that's going to drive a change for everyone, not just neobanks, but all banks. So if you think about the UK and potential moves towards 50-50 liability splits and other things like this for scams, well, that's going to need banks to step up their controls. It's going to need banks to make it slightly harder to move money in some cases. But also, it's going to mean that you have to look at money landing in as well as money going out. And that's going to, again, be for everybody. So that may drive a change in those user journeys. It may drive some of the neobanks to need to look at inbound flows and potentially prevent money landing in, or use that as context when it goes out, which may start to drive a change in these numbers. But I'll leave you with that for this weekly update. Thank you.